Welcome everybody to the show. I'm Jared, the Stacking Surfer, and I'm excited to have you guys here. We've got another awesome interview with Andy Schectman, the president of Miles Franklin, and he's got probably a pretty cool announcement today that that has been going on for a few days that I'll have him do. But today we're going to be talking about silver and gold. We're going to be talking about what's happening in the markets. We're going to be talking about what could affect the pricing and where we see things going in the near future here, guys. So this is going to be a great interview. So I'm going to go ahead and bring Andy on. Andy, how are you today?
I am good, Jared. Good to see you, my man.
It's good to see you too.
How you doing, brother?
I'm doing well. So we've had a lot going on just in this last week. But as we're getting started here, I wanted to see and just do kind of a shout out real quick for your new studio and some of the announcements that you've got going on.
Yeah, we thank you. I appreciate that. New offices, new studio, and proud to have brought on Michelle McCory as someone who's going to lead our new media division. For those of you who don't know Michelle, she's used to run Kitco's YouTube channel for quite some time. She has an incredible resume, and we're very excited to bring her on. And the goal really that I've had for a very long time, Jared, the idea that I've had for a very long time is to connect various communities, that the mutual exclusivity of the Bitcoin community, as an example, and the precious metals community is silly. To a degree, we all see the world the same way. Now, if you're walking in a door, the Bitcoin people arguably go to the right to try to make profit, and us gold bugs go the other way to try to preserve what we've made. To me, that's a marriage made in heaven. You know, I used to have a buddy who was an all-American wrestler, and well, he still is my buddy, but we used to travel as families. And we would end up arguably every time in places with our families, and there was a casino nearby. And he and I would always, after the kids went to bed, we would end up at the casino. And every single time I hung out with the guy, he would have a pocket full of chips at the end of the night. And I'm like, finally, I said to him, Ted, how the hell are you doing this? I sit there with you all night long. I never see this. I mean, I didn't see you win all night long. How are you doing this? He says, every hand I take a chip off the table and put it every hand I win, I put a chip in my pocket. And that's kind of the idea here, is that, making all of this profit with Bitcoin, moving it or other cryptocurrencies, and transitioning some of the profit into gold and silver is a way not only to make your portfolio stronger, I think, but really to greater accentuate the reasons that you got into perhaps cryptocurrencies to begin with, or at least the understanding once you understood it, that we're all kind of doing so for the same reasons. The mismanagement of monetary policy, the irresponsible fiscal policy, and all of the issues surrounding inflation and money creation, and the reasons that people would find interest in alternatives to the dollar were very much the same. And so I think not only does bringing the two communities together make the portfolio stronger, makes our arguments stronger, our communities stronger. And Michelle is very tied in with the Bitcoin industry. And in fact, she has been MC for several Bitcoin conferences around the world. And that's just one aspect. But we're excited to bring her on and to build a media division and to have a very, very open mind about what we bring. There's three sides to every coin. Everyone only thinks there's two. There's the front, there's the back, and there's the rim, somewhere right in the middle. And we want to present both sides and let people decide what side of the what three sides of the coin they end up on. And so I appreciate you letting me say that and bringing that up, but it's something we're very, very excited about. And it's been very hard for me to keep a secret, as this has been going on for a few months now. And but here we are. In fact, her and I are doing our first show together right after this.
I love it. Well, I think it's great news. I mean, Andy, what you're talking about is really what I think is very important in the country, right? There's a lot of us that see what's gone on with fiat dollars, and right. We've seen what's happened with taxation of the income tax. And, I think a lot of people see the manipulation that's gone on with the Federal Reserve ever since its inception, right? It basically creates bubbles and busts. And what we've really seen starting in 71, when Nixon took us off the gold standard, is we started to see the disparity of wealth and we started to create, this top 10%, 5%, 1% of the wealthiest people in the country, where just about everybody else has kind of, had that same standard of living. But sometimes it's hard to see that because people have cars, they've got 4K TVs, and they have iPhones. So sometimes it feels like they're doing okay. But the reality is, if I go back in time, my grandparents, they didn't leverage everything. Their home wasn't a massive percentage of their net worth. Things were different back in the past, and a lot of people just don't even realize it today. But what I'd love to hit with you, Andy, today, a couple things I want to hit today. So one is talking a little bit about silver. I know people think it's just going to go straight to the moon. It's usually going to have ups and downs as it continues to move, but it is looking like it's getting close to, really breaking out of this 45-year cup and handle. It's not quite there yet, but it's moving towards it. And so, one question I have for you is, $100 silver, triple dollar silver. Some people feel it's a dream that'll never happen. It's something that I think is going to happen much sooner than people realize, but it's going to be a hard one to put a date to it. So that's one question I have for you, is some of your thoughts on when we might get there and what are some of those indicators that we're getting closer to it. The second one is I'd love an update if you have anything on the BRICS. I think they're meeting here pretty soon, maybe this week.
They just did. They got done a couple days ago.
So I'd love to get an update on that. And then kind of the last one that I've seen really hitting in the markets that I'd love to get kind of your thoughts on is around interest rates. So we've got a lot of push from President Bush to lower interest rates by 3 points. I think that 300 basis points, that's what he said today.
Are we in a time warp, President Bush?
Sorry, did I say that? I meant President Trump.
Yeah, you just dated yourself, brother. No, I get that.
Myself. So President Trump with a interest rate lowering is what he's looking for. And with the CPI and the consumer price index, still moving upwards, to me, it looks like maybe we need to raise rates, not lower them. But there's a big push to have those go down. And oftentimes, and this is kind of where you get those two different camps. If you're accumulating right now, you don't want the rates to necessarily go down. Because the moment that they do, we're going to start to see a lot of these commodities and cryptos start to go up higher. But those are kind of the three questions I wanted to cover with you today.
Yeah, those are all good questions. We can start with silver, and I would say that the silver market and to an equal degree, the platinum market, to me, are under great stress at the futures level. And it seems to me prices are disconnecting on the futures from the real physical prices. You have a situation where it seems to me that traders across the globe, whether it be in London or in the United States now, are rushing to secure metal to avoid the risk of physical shortages. And physical shortages at that level are very prevalent right now. We can start with the London Metals Exchange. The London Metals Exchange is a 140-year-old exchange. It's the oldest in the world. And according to an article that just came out by a TD Bank analyst, it's the lowest free float ever. I think the guy's name was Daniel Golly, maybe. And he is an analyst at TD Securities, and he argued that the outflow of silver out of the LBMA because of the tariff arbitrage, which I don't really agree with, because I think that was the cover to reshore all the metals. I think it's much deeper than that. I think someone got into Trump's ear and said, listen, man, if you don't do this, if we don't bring this shit back, it's a big, big, big problem. The rest of the world is doing it, and I think he understood that. But what he came out and said is because of that, the inventories of freely available silver, we call that the float, is the lowest level in recorded history since they've ever been keeping records, ever. And so I think the number was 155 million ounces. That's less than a day's worth of trading volume for spot silver in London. And this is a short squeeze in what arguably is the world's most important silver trading hub. At the same time, as a result of that, you have a dramatic spike in the cost of the 1 month lease rate or borrowing silver. It's gotten as high as 8%. This is a level that you never see. So you have to pay 8% to borrow silver to cover a short position, perhaps. And this illusion of liquidity from the silver markets, Jared, in my mind, only rebalances, and I think in this analyst's mind as well, through some sort of a squeeze where the physical price has to go much higher. It's already up 33% this year, outpacing gold basically, but it has to go higher. Now, the LBMA, just to underscore that as an aside, is a T+1 market. I think we talked about this before. That's T+1 day. T is trade day plus 1 day to settle. On the third day, your metal should be moving. If you own a multinational gold and silver jewelry company and you need these bars to fabricate your jewelry to sell all around the world, and you have these contracts, you stand for delivery, you need it, you're going to start making jewelry. Well, sorry, man, we know it's T+1, but the Bank of England is telling us it's a shortage of manpower and trucks, that they don't have enough, so it's as long as 8 weeks you're going to have to wait. What that really means is they're caught with their pants down. Now, that 155 million ounce float, David Jensen is someone you would love to have on your show. I'm going to try to get him on mine. He's an analyst for the LBMA, and he's phenomenal, and he has a Substack. Right. You read him?
Yeah.
You know who he is? Okay, so he says that this free float is 155 million ounces, but they're trading that entire amount every single day. In fact, his numbers were higher, 180 or 90 million ounces every single day, which would be the entire float every day. And okay, that's bad enough. But he also goes on to say that the numbers that they post are the final settlement numbers. They are not the daily trading numbers, which they trade 10 times as much, 10 times more than what they're showing. So they're trading as much as 1.9 billion ounces a day, per day, every day, with only 155 million ounces behind it. What could possibly go wrong when you're trading 3.5 times annual global mine supply and 12 times the available float? Well, how about T+8 weeks? That's a problem. And then you take a look at the COMEX, and the commercials 2 days ago had about 80,000 contracts net short. That's over 400 million ounces. And they built this massive short position right around 37.50. So silver was up to 39. They were hemorrhaging. Doesn't surprise me that they're trying to bring it down right now. It's at 37, almost 38, 37.80 or so. They're getting closer to that point where this short position is at. They've knocked it down a bit, but they're trapped. And the breakout, the setup is explosive, and the ability to hold the price down is insane. If you're selling short over 400 million ounces, think about that. That's 3 times the float on the LBMA and many times the float on COMEX. This is an existential threat. So not only has silver hit its highest mark since September 2011, the banks just set a new record for their largest short position ever. At the same time, the exchange for physical, this is when you would exchange a contract for physical or a physical for contract without going through the settlement process on COMEX, it surged almost 250% in the last couple of days, meaning if you want to do this, you're going to pay through the nose because the traders know that these short positions are very dangerous, could very well be trapped. So this increase signals serious stress in the silver market. That's the truth. Now, look, what it means, traders are scrambling to find physical silver, which is in short supply at those levels. Yep. And this often reflects not only tight physical market, but trust in the system is finally breaking. They don't trust the system. No, we don't want your paper. We don't want to roll it forward. We're going to stand for delivery. Thank you very, very much. And that's really what this is about. I mean, silver is in every single way, whether you're talking about skyrocketing lease rates. By the way, the platinum lease rate is as high as almost 18%. And that's unheard of. So you have the lease rates high. You have the exchange for physical moving significantly higher, which is another sign of dislocations and demand for physical delivery. I don't know that you could ask for a more bullish setup. And then you look at the amount of silver that's being delivered into COMEX. The May and June contracts are off the hook. The May contract was the biggest delivery, the second biggest delivery ever in the history of the COMEX market. Who is standing for $1 billion in delivery. I want to read to you one thing here from a guy named David Bateman. You know who that is?
I do. I was just looking for his post off of X that showed all of the silver that he had.
Yeah, I think it was a couple months back, and I wrote something here. I want people to listen to this. Here are the reasons I invested close to $1 billion in precious metals over the past 6 months, including the purchase of 1.5% of the annual global silver supply, or 12.69 million ounces of silver. 1. The global monetary system is about to collapse. Read The Great Reset or Basel Endgame. 2. The biggest credit bubble in history will soon pop of over $300 trillion. 3. There is no way the U.S. can refinance its $28 trillion in maturing treasuries in the next 4 years without an obscene amount of printing. Now, I'll stop there for 1 minute. If we bring $5 trillion a year in tax revenue and we have $28 trillion owed, in 4 years, we're $8 trillion short of meeting those obligations, let alone the $3 trillion deficit we'll run this year and every year going forward, let alone paying for discretionary spending like military, let alone for anything else. We're screwed in that respect. Gold and silver are the only meaningful life raft. Physical possession is everything. This is from as I mentioned, David Bateman, the billionaire. Physical possession is everything. The whole world right now is a sophisticated game of musical chairs. The chairs are precious metals. Now, he says the following. I don't want to make anyone angry, but he believes that crypto is a psyop. Those who purchase will have no chair when the music stops. Real estate, crypto, stocks, and bonds will all lose significantly compared to precious metals. The banking system has been meticulously designed to seize your assets, to buoy up a collapsing banking sector. See The Great Taking. You have zero counterparty risk with precious metals in your possession, and I'm up 20% already on most of my purchases. He says this is not a drill. Your grandkids someday will either muse or lament this financial decision you're now faced with. Do not fail them. I don't know, dude. I think there are very few times in life where you get an asset that has an asymmetrical set of properties the way silver does, meaning the very, very low downside with tremendous life-changing upside, and the ability to remove yourself from the matrix and get out of the the ecosystem, if you will, with gold and silver that is invisible. To me, silver is the opportunity of a generation, and I don't say that lightly. I mean that sincerely, to my soul, to my core.
I agree, and I was scrolling while you were on camera there to try to find his post, but I couldn't find the original one. But
I think it's like April 20th or 30th.
It basically shows pallets, a row of pallets of COMEX bars, right? The 1,000-pound COMEX bars, and it's
yep.
Yeah, so I'll see if I can find it, but it is. I mean, right now, I did a video with my girls and one of their cousins when we were in Hawaii, asking them about silver and gold because I've started teaching them. They're watching some of my videos and they've received some silver and gold for, birthdays and Christmas and holidays and things. And, they're still figuring it out, but they're starting to understand more and more about the importance of it. And, there's huge opportunity here, guys, for those of you that may not be stacking or investing in gold and silver yet. For those of you that are, it really comes down to understanding ratios, timing. It comes down to, what your needs are in your portfolios and everything else. One thing I do want to let you guys know, there will be some time at the end of this for Q&A. So if you've got questions for Andy, please put those in all caps. That way it's easier for me to find them and I can pull them up for us to go through them. The other thing I'm just going to throw out, guys, just to help more people see the video and find us here on this live, go ahead and hit that thumbs up if you haven't done so yet. And if you're on TV, you can pull out a phone. It's easier to pull up YouTube again and do it from there. But do that. That'll help more people see this. So, Andy, as we're looking at that, we're not leaving gold behind. Gold still has a massive potential upside here in this, what I would call just the beginning of the bull run over the last couple of years here. And we're just starting to see that momentum. Do we have any updates that are coming out of BRICS? I haven't had a chance to check that yet, but are there anything we should be concerned about or anything we should be alerted to?
Yeah, I do want to talk about the BRICS, and that's going to take, I'm going to ask you for 4 or 5 minutes on that. Before I do, you had mentioned interest rates, and I want to talk to you about that because something that concerns me with interest rates is that if you look around the world, Jared, many of the currencies that are measured against the dollar, like the euro, have been lowering rates. And
Yep.
since the U.S. has not lowered rates, the currency, which in a normal situation would be rising, not falling, signals to me an ominous sign.
Yep.
Because if rates remain high, which ironically are still historically low, the government's expenditures for interest will continue to skyrocket, and this causes the problem, that anticipated moment that everyone expects, the crash or whatnot, and happens much faster. But to your point earlier, if rates are lowered, which Trump wants, it will reignite inflation and to ramp up much faster than I think people anticipate. And you know, I think that's an important thing to understand here, is that we're trapped, right? And we're trapped in an environment where if they raise rates, because we've gone so far down the indebted pathway, that if rates rise, servicing the debt becomes much more difficult, and of course the business environment becomes much more difficult. Just meeting our obligations become much more difficult. Rates rising puts things in a very precarious position. All of the problems, much of the problems that we find ourselves in, go back to suppression of interest rates, which created distortions in asset prices, created unrealistic expectations, created anomalies in price discovery. It created misallocations of resource and capital. And what happens is that as rates rise, not only do all of these assets collapse because they were all factored in under 25, 30 years, over 20 years of low interest rates and almost zero bound interest rates for the last 10 to 15 years on the federal funds rate. So you have an environment where if rates rise, stocks collapse, bonds collapse, real estate collapse. How about banks? Well, at 5% on the 10-year, we saw Silicon and Signature start to fail, and others. Little old Lindsay, Oklahoma, and others. And what about the insurance companies who are fully loaded with treasuries? And so when you look at indebtedness, when you look at distortions in asset prices, when you look at everything that makes people feel rich, starting with their home and their 401k, a spike in interest rates makes it very, very difficult. As an aside, this is why Judy Shelton advocates for having treasuries backed by gold, because they're going to, in my mind, sacrifice the dollar at the altar. They're going to continue to print. We have no choice. There is no way, to David Bateman's point, you'll never pay off all of the debt. You have $28 trillion coming due in a few years by 2028. And how the hell, it's 3 years now, not 4. How the hell do you pay that off? When that doesn't even, I mean, just the tax revenue alone only gets you just over halfway there. Then what? And that doesn't take into account all of the indebtedness along the way. And so they will continue to print. They will continue to debase the dollar. And that's a problem. So there's always demand for the U.S. Treasury, but at what interest rate? If you continue to inflate and debate, this is why they lie about the CPI, the CP lie from the the BLS, because they don't want people to really know what inflation is. John Williams of Shadow Stats will say put an 8 after or before the 3, and you're at 11. That's where we're at. And he only measures them based upon the metrics that they used to employ way back when, before they were changed under the last several administrations. They kept changing the metrics by which inflation is actually measured. And so the bottom line here is that, if they decide to try and lower rates, you're going to reignite the inflation engine and things get crazy, which ultimately lead to much higher interest rates. If you try and tighten, well, then rates rise and the whole thing starts to break. And, we had to have the Fed come in and buy $48 billion worth of treasuries just a few weeks ago, 3, 10, and 30-year treasuries, just to keep the game going. We had to have the Treasury Department come in and 2 weeks in a row buy $10 billion in long maturity treasuries in buybacks. There's no demand for them. So why does Judy want gold-backed treasuries? She wants gold-backed treasuries because they're going to sacrifice the dollar. And the more important piece of the puzzle is, how do we continue to find demand for our treasuries? So what backing gold by the Treasury would do would be eliminate the need for high interest rates, because the high interest rates is another way of saying the cost of inflation, the time value of money and the cost of inflation. So if you peg gold to it, you can have, as Judy says, near zero coupon bonds, because at maturity, the increase in gold in relation to an inflated and devaluing dollar compensates for the interest rate. So if we can continue to spend and do whatever we need to do, have very low borrowing costs by pegging gold to the treasuries, then that would give us arguably a fighting chance at reshoring manufacturing over the next several years and fighting our way and growing our way out of this problem. See, the problem now is Trump wants to lower taxes and continue to spend his ass off. He wants to raise the debt ceiling to $5 trillion. And we had Doge come in and say, hey, here's $2 trillion. Here's $2 trillion in stupid spending. They only agreed because Congress couldn't agree on crap to 80 billion. That's 38 hours of spending by the U.S. government. It amounts to a whole lot of nothing. And so the bottom line here is that Judy's idea of pegging gold redeemable at delivery and to start with 50 years gives a long runway for gold to really get higher. But her idea and shorter duration over time is to have lowered borrowing costs for the Treasury to finance our indebtedness and our spending. And the Treasury market, arguably, the rails of it provide the liquidity that the world has come to accept as a very liquid, safe place to park your money. But because of the weaponization of the Treasury, the lack of trust is overwhelming. So how do you get trust? How do you sell your treasury without interest rates going to the moon? And if interest rates do go to the moon, you're fucked. Stocks, bonds, real estate, the banks, the insurance companies, poof, gone. So that's what this is all about. You inject lower interest rates again, it's like doing the same old stupid crap over and over and over again. Interest rates should be deemed by the marketplace, not by a bunch of bankers, certainly not a central banker. And all I can tell you is that ultimately it is my belief interest rates need to go much higher, to your point, not lower. If we go lower, inflation ignites, which ultimately leads to rising interest rates to compensate for the loss of purchasing power. If you raise rates, you're right there. Both roads lead to the same place. So we need some form of different thinking, and that's where Judy Shelton comes in. All right, let's move to the BRICS, unless you have any questions with that.
So just a couple points I wanted to point out. There was one comment out there that I think's kind of a cool stat for people. So I think let's see, it wasn't Rob. Or maybe it was Rob. So just real quick, Andy, because I looked this up. To be in the top 10% in the United States of owners with silver, it's 75 to 100 ounces. Top 5% is 150 to 200 ounces. Top 1% is about 600 to 750 ounces. It doesn't take much, guys. People just do not have silver in this country, which is scary. And then to your point, Andy, it looks like we're getting news that Jerome Powell's going to be in until his term's up. And so, the speculators are now kind of on trying to figure out who's going to be replacing him. Judy Shelton does come up as one of those people, and I have read what she said about the bonds and backing them with gold, and I think it makes a lot of sense. We don't want to get to the point where we have to raise them so high that because we can't just have the Fed buying them all. You don't want it to raise so high that those interest rates basically end up crippling the entire nation and our budget. We have no other spending besides interest. So great points there. But yeah, let's talk about BRICS now. That'd be a perfect segue.
So, look, as far as BRICS is concerned, it is, if we go back, and I don't remember how much of this we talked about. Well, let's just start with where we are right now.
That sounds great.
Sunday, the BRICS declaration announced that 10 new countries from various regions around the world have joined as official partner countries. They are Belarus, Bolivia, Kazakhstan, Cuba, Indonesia, Nigeria, Malaysia, Thailand, Vietnam, Uganda, and Uzbekistan. These countries combined represent 55% of the world's population. The 21 countries represent approximately 45% of the world's GDP. One of the main themes at the conference was peace, cooperation, and respect, blah, blah, blah. I find it interesting that Vietnam denied having finalized any deal despite U.S. claims to the contrary. Okay, that's the news. But let's talk. The main thrust of that meeting was to. Let me ask you a question, Jared. By the way, do I look as pixelated as I look right now to me, or not?
Let me look. No, you don't.
Okay, good. On my own monitor, I do. I just want to make sure I don't. Anyways, the main thrust, according to the Brazilian president, was to create a common settlement system that independent of the dollar, independent of the SWIFT. And this is the infrastructure is mBridge, as far as I'm concerned. And we've talked about mBridge before. mBridge, built by China, Thailand, the United Arab Emirates, and Hong Kong. It's a multi-central bank digital currency platform. It's blockchain based, etc. And it's a system that lets all these countries settle trade in digital currencies directly and instantly without SWIFT. And they did in 2022 or 2023, I don't remember, they did a 22 million in cross-border payments processed by 20 commercial banks. These were test trades. It works. And it isn't theoretical anymore. It is the plumbing, in my mind, of a new global system that is being laid in real time. And it's designed for a world where the dollar is an option. So in other words, it's not like they are trying to destroy the dollar. In other words, in my mind, it will lose its monopoly, not its existence. And the real danger isn't replacement. It's more along the lines of irrelevance. And I think the longer that we use the dollar as a weapon and the treasury as a weapon, the more the world finds a way to live without it. And that's what is happening. So kind of look at it as a slow unraveling of dollar dominance. And this is what they're talking about. So they're not talking about a common currency. It's a common settlement currency. So if we look at the mBridge is that cross-border payment system that is operational. Now, about 3 weeks ago, China came out and said, we have connected through what they called the renminbi cross-border payment system, which is mBridge, 11 Asian countries. I don't know if we talked about this or not a couple of weeks ago, but there's more to it if we did. Anyways, 11 of these Asianic countries and 5 Middle Eastern countries. And again, this system settles in 7 seconds, not the 3 to 5 days with 4 currency swaps between currency A into the dollar, into currency B, into the dollar, then back to A. So, this is a 7-second settlement with a 98% reduction in fees instead of the 3 to 5 days it takes SWIFT. And it's not compatible with the dollar, the pound, and the euro. It is not compatible with the dollar, the pound, and the euro. That's a very important point here, right? So China came out and said, we've connected these countries. It's operational with the 11 Asian countries in Southeast Asia and 5 Middle Eastern countries represent nearly 40% of global GDP. Wow, that's cool. Now, I want you to think of what I'm about to tell you in terms of what got me interested in the BRICS 5 years ago. Okay. And I will say that I have done more videos on this topic than anyone in this industry or in the world, for all I know. I've done almost 5,000 videos on this topic. And I have been right on most of what I've said along the way. And I'm not patting myself on the back. It's actually kind of frightening. And what I see that just happened, I believe, is more significant than anything I've reported to this point. And I'll explain it in a moment. But I want you to think about it in terms of, first of all, what I just said, the Asianic countries in the Middle East, 38% of global GDP. The Belt Road Initiative. Now, before I go into that, China just came out and said, we've now made it official. We're trying to internationalize the yuan. And the way we're going to do that is through the Shanghai Metals Exchange. Yuan payments are now directly convertible into gold in yuan. You don't have to convert to dollars. So as an example, if China were to buy oil from Saudi Arabia over mBridge, they could pay for it in digital yuan. It is not, doesn't go through SWIFT. U.S. has no idea what they're doing. They can take that yuan and immediately, if they wish, send it back to the Shanghai Metals Exchange for gold. at the yuan price, which not the dollar price. They don't have to convert back first. So that gives credibility. In other words, gold isn't replacing a currency. It's standing behind a currency. It is the spine, if you will, of a new system. Okay, so they came out and said that. Then they also said that we are now creating a series of multi-jurisdictional vaults. The first one outside of Shanghai is now done in Hong Kong. The second one, which is under construction, is in Saudi Arabia. And then we intend to build them throughout the Belt Road and other parts of the world. But the Belt Road is Asia and Africa in particular. So they are trying to internationalize the yuan and internationalize it by making it redeemable in gold and storing the gold in a series of multi-jurisdictional hubs. Now, if we go back to last year, we remember that Dilma Rousseff, the former president of Brazil and the head of the new development bank, said, yeah, we've agreed in principle to a new settlement token called the unit, which will be 40% gold-backed, redeemable upon demand by central banks, and 60% a basket of BRICS plus currencies. Well, Trump is all pissed off about that. If you do this, it's 110% tariff. That's a sanction, by the way. What I believe they are doing, and I'll connect all the dots here in a moment, but what I believe they're doing is China said, screw it, we'll be the guinea. We don't have to antagonize them by saying that here's the unit traded over Ambridge. We'll do it ourselves and say we're going to do it with the digital yuan. That's what they're doing. So they are creating the rails and the infrastructure. The rails are the Ambridge, which trades seamlessly amongst central banks, and then the multi-jurisdictional vaults where each country, so Saudi Arabia in theory would put gold in Shanghai, in Hong Kong, and in these vaults across the Belt Road all the way around, and so would China, and so would Russia, and so would India, and so would all the countries would have gold all around, so it's not in one jurisdiction. There's a new vault that just is being built right now alongside the Moscow vault, a new vault in Russia. There's the new vault that was just built in Singapore. There is all sorts of, there's a vault in Dubai. All of these vaults that are connected to this group will all be connected to this new system, right? This is the settlement aspect of it, right? Where you can settle imbalances in gold. All right, so now let's go back. What got me interested in all of this in 2019 was the Belt Road, the largest infrastructure project in human history. 75% of global GDP, 50%, or excuse me, of human population, 75%, 50% of global GDP. These are countries that are underdeveloped, they're resource rich. China comes in, builds oil refineries and gold and silver mines. They build roads, bridges, maritime channels, railroad tracks, military patrols it for safety, and it allows them to help industrialize all of these countries to bring their natural resources to the market, to allow them to have the infrastructure to do so, and China gets a piece of it. That's the idea. They want to internationalize it and pay and do all the payments to start with in the digital yuan over Ambridge, settling imbalances in gold. No more dollar settlement. No more putting reserves in U.S. treasuries. So then you look at the Shanghai Cooperation Organization and the Eurasian Economic Union. The Shanghai Cooperation Organization, you know, of course, Iran is in it and China is in it. And you got all of these, they're 50% of human population themselves, 35% of global GDP. The Eurasian Economic Union, and some of the countries have just applied to BRICS, like Kazakhstan. These are the countries that end in stan. They want to be part of it. The president of Belarus, who just applied to BRICS, said the Shanghai Cooperation Organization and the Eurasian Economic Union need to join the BRICS. They're all intertwined. But so are the 150 plus countries in the Belt Road. They're not in BRICS, but they are very connected to BRICS through China, through the SCO, through all of these organizations. It's kind of like Switzerland, who didn't become part of the European Union, but they have treaties to trade with all of the European Union countries. They remained autonomous. Well, in this case, these countries may not be ready from an industrialization standpoint or whatever to join the BRICS or to apply to the BRICS, but they're all very much connected. Okay, follow me so far? Now, here's the key to it all. The Russian foreign minister, Sergei Lavrov, who was in meetings with Dilma Rousseff last year in Russia when she came out and said, in meetings with Lavrov, we have all agreed to a new settlement currency called the unit. It will be for the BRICS nations. It will be traded over Ambridge. But then at the 12th hour, the Bank of International Settlements, like literally at the meeting, they came out and said, because the China, Hong Kong, Singapore, or China, Hong Kong, Thailand, and the UAE, they developed mBridge. Well, they did it in accordance or in concert with the BIS, the Bank of International Settlements, the biggest bank in the world, the central banker's central bank, which is a Western institution. And that's probably why they pulled this shit. They did espionage. They pulled out at the 12th hour, and they said, we can't help any country use this platform to sidestep Western sanctions. They've been building it for 4 years, and they just now realize that Russia is the iron BRICS, in essence. And so they back out and pull the plug on it. Well, that really pissed off the BRICS, and that's why everything's gone radio silent. All right, so here we are. Lavrov, here's the kicker to it all. Lavrov, 10 days, 2 weeks ago, comes out and says, this new system is not compatible with the dollar, the pound, or the euro. There's the target. We don't want them in our game, but we are opening up this new payment system to non-BRICS countries. Now take a step back and think of what I just told you. Belt Road, Shanghai Cooperation Organization, the Eurasian Economic Union, the countries in Southeast Asia, the Middle Eastern countries that represent roughly 90% of human population, the majority of all of the commodity production in the world, the two biggest manufacturing centers in Vietnam and China, all the rare earths in the Eurasian continent, in Indonesia, who has the largest nickel deposit in the world, the majority of the trade routes on land and on sea, 3 of the 4 largest nuclear arsenals. You see where I'm going with this. You do not need to have a common settlement currency right now to blow up the settlement status of the US dollar, where the majority of world population can trade over mBridge and settle imbalances in gold. Whether or not they are BRICS nations, they will trade with the BRICS nations through this platform. And the people in the US and the European Union and Great Britain, well, they're out. They're out in the cold. And so what this would do would dramatically affect the settlement status of the dollar, as it would be less and less and less and less and less and less and less relevant. And the reserve status of the dollar is all about U.S. treasuries. And we just talked about that. And let's look at gold. Let's give you 3 examples. It's doubled the performance of the 10-year treasury over the last 25 years. Doubled it. Last year, gold was up 40%, the 10-year treasury 4.5%. Okay. This year, so far, halfway through the year, the 10-year treasury is up 2.25% on a 4.5% treasury. It's up 2.5% so far. But the dollar's down 10% and gold's up 35%. So in essence, the treasury would be replaced with things like gold. So these countries would have every incentive to build their own ecosystem, their own monetary ecosystem, where they would have to take care of it and not be irresponsible like we are, because you're trading amongst one another. I'm trading my CBDC with you, Jared, and your CBDC, and we settle imbalances in gold. And if I don't want to hold your currency, I send it back and get gold through the mBridge, which has no connectivity with the SWIFT. It's an amazingly simple deal. Now, my belief is they're doing this to not piss off the West, because very quickly, just like that, they could say, okay, this works, and we're now we're adding on to it the new unit settlement currency that we've all agreed upon. And after everyone deposits their gold in the multi-jurisdictional vaults, we open up the unit, and it's not just the digital one, it's the unit, because the rails work, and you have enough countries signed up on it, doing it operational, bang, just like that. And the dollar's relevance begins to instantly disintegrate. And so I think that is the biggest thing to come out of this is not even all the countries that have signed up, none of the rhetoric they've talked about, none of it. It's Lavrov who says this is now being opened up to non-BRICS nations, except it's not compatible with the West. That, to me, you're basically saying pretty damn well near 9 out of 10 people in the world, the majority of all the commodities, the majority of manufacturing,
Oh my gosh.
it's all now going to have the ability to trade outside the dollar, and even probably more damaging, a place to park your reserves rather than in U.S. treasuries in things like gold. To me, that is the biggest development that's come out of the BRICS, and I swear to you, I'm the only one saying it. I do not know why more people aren't talking about this development, because the people who push back say BRICS isn't big enough. They can't do it. They can't do it alone. Okay, fine. How about you open it up to every other country other than the West? And then all of a sudden, watch what happens to this infrastructure. By the time the BRICS put their common settlement currency, the unit, which they've already said is agreed upon, that's the head of the BRICS New Development Bank and the former president of Brazil who said that with Lavrov. By the time they put that on there, the system is so mature and operational, there is not a damn thing the West can do. And it's a scary proposition when you think about de-dollarization and ultimately what it means for the dollar and for the treasury market. But I think it is without question the biggest development coming out of the BRICS in the last 5 years that I've been covering them, hands down.
So looking at that, Andy, there's a couple of questions that come to my mind. One of them, when you talk about these two new vaults being put in place, could they replace the LBMA and the COMEX?
Ultimately, that is exactly what they will do. And it will be the Shanghai Exchange. It will be the BRICS Metal Exchange. It will be the Moscow Exchange. It will be the Dubai Exchange. It will be all of them. And I've said this probably to you before. They talked a lot about the BRICS Grain Exchange in this meeting. And the people that are developing it 2 years ago said, we produce and consume more grain than they do in the West. But with the development of this new BRICS Grain Exchange, because we can't control the price because it's controlled on COMEX, they say. But with the development of this new exchange, that will change. Do you not think they know what we're doing with all of the world's commodities? They know that we have been suppressing them for our own agenda, whether it be silver to be suppressed for the military-industrial complex or gold to be suppressed through Gibson's paradox, the inverse relationship between real interest rates and gold. And if you suppress interest rates for 3 decades nearly to create an illusion of prosperity through your 401k and your home, turn your home into an ATM machine because rates keep falling. Since 1982, the rates went straight down. If you do that, gold will go to the moon and will signal frailty in the system. Well, they stepped on gold through the central banks and the commercial banks by naked shorting it. The banks, in essence, the way they did it for all those years, the central banks who wanted to keep rates low would say to JP Morgan or Deutsche Bank or UBS or any of the Western banks, here's what we're going to do. We're going to lease you our gold at 0.5%. All right. You're going to take that gold, you're going to immediately dump it on the market and sell it short. When you sell something short, you get money back, but you have an obligation to pay that debt back at a later date. Now, you hope it's at a lower price. If it goes up, you're screwed. If it goes down, you're in the money. So all of these banks in coordination dump metal onto the exchanges. They get money back. With that money, they buy treasuries. The purchasing of treasuries drives the interest rates down. And then when it comes time to covering those short positions, they get to keep the spread between the interest rate on the treasury and the 0.5% that they borrowed them or leased the gold at the behest of the central bank. And so now they make a fortune on the shorting of the market. They make a fortune on the spread between 0.5% and, throughout the last several years, the rates were low recently, but back not too many 20 years ago, they were much higher. And 10 years ago, they were much higher, and they're much higher now. But that is how it worked. And then all of a sudden you had 9/11 and you had Afghanistan and things started to change here in the United States, and naked suppressing gold became more challenging. And now you have an environment where, much like the BRICS Grain Exchange, these players know what we're doing and they're standing for delivery. That's why you have the lowest free float of silver in the history of the LBMA, 155 million ounces. India, for God's sakes, has imported about 900 million ounces in the last 5 years. And you're telling me the LBMA only has 155 million available? That's it? They have about 750 million, but all of that, other than that 150, the other 600 million belong to the ETFs, like SLV, who is custodied by BlackRock and JP Morgan, the biggest crooks on the planet, the ones that paid a $920 million fine for manipulating the silver market. And so it's a situation that is unraveling. And the only way that you can manipulate a market for an extended period of time without getting royally fucked is to push it in the direction it's going. And it always went that way because these countries never had the ability to stand up to the West. They do now. They're wealthy, coordinated, sophisticated, motivated, and they see what we're doing, and they're standing for delivery. The same thing is happening here in the West. I believe someone got in Trump's ear and said, do you see what's going on? Do you see this? This previous administration was too stupid to be stupid, and we are going to be screwed if we do not start bringing back this stuff now. And so you have them all standing for delivery across the West here in the United States, where the biggest money, period, is standing for delivery. So it's a very, very, very unusual time.
I agree. So, Andy, one other question, and then I've got a handful of good questions from our audience here. We'll try to get to as many as we can. when you see kind of this unraveling going on, we've talked about Operation Sandman in the past. To me, it looks like we don't even need that to happen. I mean, that could be an all-in-one moment potentially, but as these other systems are coming online and these other countries are able to start to settle, their reason to hold dollars, right? Our whole business since 71 has been exporting dollars. That's really what our business has been in this country. There's a ton of dollars out there. If these countries believe they don't really need those dollars so much anymore, we're going to, and the bonds, right? We're going to have a ton of excess stuff. It's going to have the same effect as doing an Operation Sandman. That would be more drastic right at once. But we're already seeing countries like that. I've heard Japan maybe needing to get rid of some of their bonds to try to shore up their, the yen. And they're already having issues. So, to me, it looks like, you want to have some paper money around because we still use it for day-to-day stuff. But, the saying of having 30% of your portfolio in cash does not apply anymore. At least I'm not doing that. And I know a lot of people have done that in the past. Everything's changing and it's moving that direction. So I guess the question I'd ask to you is, do we need an Operation Sandman to cause problems, or is this something that you see just happening kind of organically over the next, several years?
No, I don't think things need to happen in a nanosecond. I think much of the rest of the world has a different view, and they take a longer term approach where this is a situation that, there will very well potentially be a all at once moment, but I think that it will be a slow unraveling, if you will, leading to irrelevance, perhaps leading to that moment where you see everyone dump all at once. But it would cut off the nose of too many countries' face to do that all at once. Doesn't mean it won't happen. That doesn't mean that there isn't an all at once moment. There very well could be. But I do think that until that happens, it is a situation where maybe the dollar doesn't go down in flames, but it fades in relevance, especially in the global south. It will lose its monopoly, not its existence, until it does. And I think that is the real danger for the dollar. It's that the dollar, it's not its replacement, it's irrelevance. It becomes irrelevant. And the longer it uses its currency and the longer it uses its treasury as a weapon, the more that this happens. So, there might be.
Just won't want to hold it is what's going to happen. Like you said, irrelevance.
Yeah, it's a longer drawn out process is kind of the way I look at it. And then there's that all at once moment. And that's the thing. People in the West have a hard time rationalizing something that is long and drawn out. But the entirety of everything that China in particular does is the long game. And that's why when it finally switches, you're so far behind the infrastructure, there's nothing you can do.
That makes sense. I guess I had a couple quick ones we'll go through because I know we're getting close on time here. This is the first one we've talked. A lot of the stuff that's in questions we've talked about. We have previous videos, guys, you can go back to and see. But do you see a time where we could get back to the mining ratio for gold to silver? Is that possible?
I mean, I don't know when, but yeah, sure, it's possible. The mining ratio is 7-1. The historical ratio for 5,000 years and the mining ratio was 16-1. Yep. And that's all been distorted, of course. But at where we are right now, it's the value of a generation, truly. But at some point, you would think that ratio has to sync up with reality. Even 10-1, 12-1. That's not outlandish. I mean, if it's a 7-1 mining ratio, geologic ratio, at some point that has to express itself in reality, especially in an asset that is, in my mind, strategic, not industrial. Mm-hmm. I mean, yeah, it has industrial components, but it really is strategic. And why would 8 banks in the West be holding the largest concentrated short position of any commodity ever traded if it weren't as strategic as I believe it is? It's again, this is misdirection. So yes, ultimately we could, but the market can stay irrational longer than most people can stay interested or solvent for that matter. So don't know when, but it is certainly a logical proposition.
I agree, especially on the street. So I agree with that. It can take a long time, guys. So, you know, if you're asking these questions to try to peg an investment turnaround, that's the wrong question to ask. It's maybe the wrong reason to hold, you know, the silver right now. If you're trying to get a quick flip on it, you know, if you're doing that, maybe look at some of the mining stocks and see if you can get some returns. Strategic, though, I think is very key. If it's just industrial, as the price starts to go up on silver, they'll just stop using it. They'll find a substitution for it.
Well, let me
I don't think they can do that.
Let me push back against that one theory. See, I think the bigger reason they've kept the price down is because of the supply, ultimately, the global supply. It's not silver is what is called inelastic. And let's say there's a fifth of an ounce of silver in an iPhone. So what if the price of silver goes up fivefold? Okay, it goes from 37 to 150 an ounce. Yes, it has a material impact, but not that big of an impact. It's used in such small amounts in all industrial applications, and you need it because of its conductivity. There's nothing that conducts heat or electricity or reflective as silver. So yes, some applications would switch to copper or whatever it may be, but most wouldn't because they need it to make their product. And yes, it's a small core component, but if it goes from $5 to $25 worth of silver inside of an iPhone, they'll just increase a little bit the price of the iPhone and continue to make it. So in other words, I think the reason they step on the price is because they don't want the world accumulating it all, which would then not allow the military-industrial complex to keep silver cheap to make weapons, to sell them all around the world, to blow up places like the Ukraine, and then get the reconstruction contracts. Being that BlackRock is the custodian of SLV, the largest shareholder in PSLV, and owns all the military-industrial complex, the weapons makers, owns them all. So it's a game where the West has been holding down silver for a reason. If the price got too high, it's not even that big of a deal in terms of the ultimate cost of whatever it is they're making. It's more along the lines of there just not being any silver to get. I think that's more along the line. So I would argue because of its inelasticity, it can go up 5 times and you'd still be getting iPhones with silver in them and computer screens with iPhones and solar panels, you know, because it, in essence, it only makes up a very small component of the total cost of whatever it is you're buying.
Totally. So, you know, kind of what I meant, maybe I said it wrong. If it was just industrial, you might start seeing some substitutions as the price goes up. To your point, though, I think it's not. I think it is more strategic. I don't think they're going to replace it within the military-industrial complex. It also has properties that are better than anything else, especially in solar panels and connectivity, and with how it is reflectivity would be the other word. So to your point, $25, no. I mean, if we got to $1,000 silver and we haven't had major inflation, they might look at some things in some areas, but a lot of places they would probably just up the price because it's a fraction of the cost of that good. Right.
Then it gets a little disruptive. I agree.
Than it would at that point. But, going into that, this is kind of what we also hit too, guys, is, it can keep going on longer than a lot of us can hang in there. We really don't know when the suppression is going to stop, but at some point, all the things Andy's talking about, it's that little by little by little, and then that suppression stops. It
seems to be stopping right now, as far as I'm concerned. It isn't over, but in gold, it's almost like they've lost the ability to really suppress it. And Eric Young on X, YEUNG, I believe it is, King Kong on Twitter, on X. He's fantastic. I've had him on my show before. He's fantastic, and he says, you guys don't lose sight of the fact that China's doing this too. China is suppressing the paper price and then flying all around the world and buying it everywhere they can off of exchanges and places like directly from the miners, as we've talked about, the doré and the concentrate. They're disintermediating the marketplace. They buy it from all sorts of places around the world that don't affect the price. Like if you buy it off of Comex or the LBMA, it affects the price. If you buy it everywhere else, it doesn't. So they suppress it in US and London by selling short and then go buy physical all around the globe immediately at subsidized prices, and they can paper over their shorts. So yes, it's this is a game that is being played by our adversaries too, because they see what we've been doing and they're using it to literally, I mean, think about like those video games on your phone where you start with like a stick and a rock or whatever, and you have to build you have to build your rudimentary house, and then you start doing things. Then you get more money, you can get a hammer, and then you get a gun, and all of a sudden you got this big community. Well, they're thinking about their community for years out into the future. They are stockpiling these assets. They bought the London Metals Exchange, the base metals. They copper and zinc and all. They're buying their relationship with the Belt Road, all of the underdeveloped or resource-rich countries. They're buying everything they can from a natural resource perspective, and they're thinking a decade or more out. We think, what's tomorrow bring? We think, what's later today bring? We don't have a proper perspective. They do, and that's how they beat us at this game, because they're very patient. It's like playing poker. If you're a good poker player, I've played a lot of Texas Hold'em, and I used to have a home game in Minnesota where half of the guys literally played in the World Series of Poker every year, and a couple of them were pros. And I learned from some really good players, and they would say things to me like, the most interesting I ever heard was, poker is the systematic distribution of wealth from the impatient to the patient. Well, that's China. They are doing that to us. They are systematically taking our wealth and commodities around the world and redistributing it to them, because they're patient and we're not. And they're doing it at subsidized prices because we've been too stupid to hold it down. We held down gold to support the bond market and the currency. We held down silver, I believe, to support the military-industrial complex. And these countries 20 years ago were borderline third world. Not anymore. These countries now are coordinated and wealthy and sophisticated, and they are onto us, and they are beating us at our own game. So have faith and hang on. And I think it will be one of these deals that will be life-changing when it finally breaks.
That's what I tell people too. So Andy, I want to thank you for coming on. I'm going to throw this down here too. What the best way to get a hold of you, Andy? info@milesfranklin.com.
Yeah, and make sure they put Stacking Surfer sent me. We'll make sure your people are getting as good of a price or better than anyone in America. We're selling pre-65 silver right now, as an example, at spot. We will do our best to make sure that your listeners are getting the very best price in the country. If they have questions for me or anything they've heard on this show, or questions on anything like precious metals IRAs or whatever, make sure that they ask it. If they want to be contacted, do so. If they don't hear back within half a day, check your spam. Sometimes 1 out of 20 emails will end up in spam, but that is the best way to get in touch with us. info@milesfranklin.com.
That sounds great. And just a reminder to everybody, hit that thumbs up and the like, as well as the bell icon if you haven't done so you don't miss these other interviews we have. Oftentimes, Andy and I are able to connect anywhere from 1 to 3 times a month. So the other thing I'll throw out to you guys, there's not a lot of live shows that Andy's doing. More of them are recorded. If you've got a question that you want to have on here, we'll take those during the live stream, but we usually can only get so far with them. Please send me an email, stackingsurfer@gmail.com, and I'm happy to look at those questions. Some of those we can build a show around, others we can definitely ask.
Yeah, well, I have a hard time saying my name in 30 minutes, so I apologize for that. But, it's something I'm passionate about, man. This all means a lot to me, and I applaud what you're doing and the questions out there, and guys like Jake and all the people who are contributing. And we're the minority, but it'll be all you that in the end will walk away from this not as much wealthy. Maybe you will be, but more along the lines of you will have preserved more than you can imagine. When this all breaks, I think it will break in spectacular fashion. So we accumulate precious metals not to become wealthy, but because it is wealth.
Yep.
And of course, if you own enough, you might be wealthy, but it helps you get out of the way of the end of a Keynesian-based, debt-laden experiment that is coming to an ugly end, in my opinion. So, Jared, I appreciate you, bro. Good to see you. And I'm out of town next week. I'm on a cruise. Finally going to take a vacation, maybe. Doubtful I'll probably be on the phone the whole time, but I will be back the following week.
Sounds
tan
good.
And happy. So in the meantime, I hope you and everyone else stays well, and I will look forward to picking up where we left off, my man.
Sounds great. And then last question, are you on tonight with Kevin?
No, because I'm doing my first interview with Michelle right after this, and she demands that her and I be the first one to to show our podcast in this new studio. So Kevin and I will be back. We're going to do one from the boat. I'm going with Kevin, our families are, and we're going to do it from the boat next week. So we'll be back on next week, and then hopefully every week from that point forward.
That sounds great. Well, I'll let you guys get to it, and I'm looking forward to seeing that first interview. So thank you so much.
Yeah, hopefully we'll be out in the next day or two after editing. But Jared, I appreciate you, bro. Everyone else, have a good one. Thanks again.
Yes.
See you, man.
See you.